Welcome to another episode of Market Brief After Hours. We've got a packed show for you today, tracking a fascinating day of trading where the big tech giants took a hit, but other areas of the market found a way to shine. Let's start with the big picture. Wall Street had a bit of a split personality today. What was the main driver behind the action?
It really was a story of two markets. On one hand, you had the tech heavyweights dragging down the broader indexes. The S&P 500 fell 0.37% to close at 7,473, while the Nasdaq Composite took a heavier blow, declining 1.32% to end the day at 26,167. But on the other hand, the Dow Jones Industrial Average actually managed to gain about 148 points, or 0.29%, led by a strong performance from Caterpillar, which jumped nearly 4%.
That is quite a divergence. What exactly was hammering those big tech names?
A lot of it came down to individual company headlines and talent drains. Alphabet dropped 5% after news broke that two high-profile artificial intelligence researchers left the company for competitors. Specifically, senior research scientist John Jumper left Google DeepMind, and engineering VP Noam Shazir headed to OpenAI. That raised some serious concerns about Google's AI talent retention. Elsewhere in tech, Amazon lost 4.8%, Meta Platforms shed 2.3%, and Microsoft declined 3%. Even SpaceX had a rough ride, falling 16% to mark its third consecutive daily decline.
But it wasn't all doom and gloom in the tech space, right? I saw some green shoots in semiconductors.
Absolutely. Chipmakers actually showed a lot of resilience. Micron technology was a major outperformer, rising almost 7% ahead of its quarterly earnings report. That optimism spilled over to its peers, with advanced micro devices climbing more than 2% and Intel adding 5%.
And it seems like investors are rotating cash into other sectors too. The small caps had a historic day.
They certainly did. The Russell 2000, which tracks small-cap companies, climbed about 1% to hit an all-time record high, crossing the 3,000 level for the first time in history. This shows that investors are actively rotating into more economically sensitive corners of the market, rather than just hiding out in mega-cap tech.
That rotation makes sense, especially with what's happening in the bond market. Treasury yields have been on the move. What are we seeing there?
Yields climbed significantly today. The two-year Treasury note yield, which is highly sensitive to the Federal Reserve's rate policy, rose more than 5 basis points to 4.232%. That is its highest level since February of last year. Meanwhile, the benchmark 10-year yield rose to 4.509%, and the 30-year yield advanced to 4.946%. Investors are positioning themselves ahead of Thursday's release of the May Personal Consumption Expenditures Price Index, the PCE, which is the Fed's absolute favorite inflation gauge. If that core PCE reading comes in hot, it could cement expectations for a rate hike as early as September or October, following last week's already hawkish Fed easing.
We're going to take a very quick break, but when we come back, we'll dive into the dramatic political shifts in Europe, a record-breaking day in Asian markets, and the latest technical levels to watch in the Forex and commodities markets. Stay with us. Welcome back to Market Brief After Hours. Let's shift our gaze across the Atlantic. Europe had a pretty busy day, both economically and politically. What stood out to you there?
The big news out of Europe was the political shakeup in the UK. Prime Minister Keir Starmer announced he is standing down as Labour leader and Prime Minister, ending months of political turmoil. This comes after Labour suffered heavy losses in local elections and faced a growing rebellion from lawmakers. On top of that, Andy Burnham won a decisive victory in a special election, setting up a potential challenge for the party's leadership. Despite this political drama, European stocks closed mostly higher. The Pan-European Stoxx 600 climbed 0.58%, the UK's FTSE 100 gained 0.72%, and Germany's DAX rose 0.62%. However, France's CAC 40 slid 0.25%.
How is the consumer sentiment holding up over there?
It's a bit of a mixed bag. The S&P Global UK Consumer Sentiment Index was virtually flat at 42.2, which is still well below the neutral 50-point mark. Spending sentiment actually fell, and consumer confidence regarding major purchases hit a 35-month low. Over in the Netherlands, consumer confidence did tick up to -39 from -46, but it remains deeply negative compared to its long-term average of -11. Dutch unemployment, however, held steady at 3.9%. And in Ireland, wholesale inflation is heating up, rising 1.6% year-on-year in May, driven by gains in chemicals, metals, and fish products.
Now let's head over to Asia, where we saw some massive moves, especially in Japan.
Yes, Asia was mostly positive today, largely boosted by signs of diplomatic progress between the US and Iran, as well as strength in AI and chip companies. Japan's Nikkei 225 surged 1.55% to close at a fresh record high of 72,353. This happened even as the Japanese yen slipped to a 40-year low against the US dollar. Investors are excited about reports that the government might mobilize public and private investment in physical AI technologies. Fujikura was a standout winner there, jumping over 19%.
And what about the Chinese and other regional markets?
China's markets had a strong day. The Shanghai Composite added 1.78% to close at 4,163, and the Shenzhen Component jumped 2.13% to finish at 16,373. Over the past year, Shenzhen has surged more than 63%. South Korea's Kospi also joined the tech rally, rising 0.69% to close at 9,114. On the downside, Hong Kong's Hang Seng Index slipped 0.65%, and Australia's S&P ASX 200 lost 0.14% to close at 8,816. Australian stock WiseTech Global plunged over 18% amid reports of a police investigation involving its founder.
Moving on to North America, we also got some fresh economic data from Canada today. How did their inflation numbers look?
Canadian inflation came in hotter than expected, hitting a more than two-year high of 3.2% in May, compared to the 3% economists anticipated. The main culprit was a spike in gasoline prices, which reached their highest levels since mid-2022. If you strip out gasoline, the consumer price index rose a more moderate 2.2%.
Let's transition to the foreign exchange market now, because we've seen some very clear aggressive trends forming across major currency pairs. Can you walk us through the technical levels, starting with the euro and the pound?
Absolutely. The Euro-USD pair took a significant hit today, closing down 0.41% at 1.1423. It closed near its daily lows, which shows intense selling pressure. Technically, the euro is trading well below its 50-day, 100-day, and 200-day simple moving averages, which are clustered around 1.1653 to 1.1671 and starting to roll over. This confirms that the medium-term structure has shifted from a sideways consolidation into a sharp downtrend. Immediate support is at 1.1419, and a break below that could expose the 1.1400 psychological level.
And the British pound?
GBP USD managed to find a tiny bit of footing, closing up 0.09% at 1.3246. However, it remains substantially below its 50-day SMA of 1.3458 and 200-day SMA of 1.3413. The overall trend is still very bearish, but we might see some short-term consolidation here as long as it holds above the recent low of 1.3184.
What about the Swiss franc and the Japanese yen? Let's check in on commodities. Oil prices had a pretty dramatic drop today. What caused that slide?
Oil futures fell sharply after the U.S. Treasury Department issued a 60-day license authorizing the production, delivery, and sale of Iranian oil, even allowing payments in U.S. dollars. This came as mediators from Qatar and Pakistan announced that U.S. and Iranian officials agreed on a roadmap to reach a final deal within 60 days. Consequently, international benchmark Brent crude fell 3.3% to close at $77.90 a barrel, and U.S. West Texas Intermediate fell 2.3% to settle at $74.82.
And gold, is it finding any support?
Gold is trying to stabilize, but still finished the session down 0.68% at $4,191. It's well below its 50-day SMA of $4,545 and 200-day SMA of $4,443. The technical structure remains heavily pressured, though we are seeing some two-way volatility near the lows. It needs to hold above $4,137 to prevent another deep slide.
Before we wrap up, we have to talk about some of the individual stock movers making waves today, as well as a quick look at Bitcoin.
Let's start with the stock movers. Apogee Therapeutics was the absolute star of the day, skyrocketing over 46% after pharmaceutical giant AbbVie agreed to acquire the company in a massive $10.9 billion deal.
Baldwin Insurance Group also had a great session, jumping more than 16% after JP Morgan upgraded the stock to overweight. And Super Micro Computer led the gainers in the S&P 500, surging over 15% following a buy upgrade from GF Securities.
And on the losing side?
Aside from the tech giants, drone manufacturer AeroVironment tumbled nearly 11% after announcing it would restate its earnings for previous periods due to a goodwill impairment accounting error. Netflix also dropped over 5% after research firm M Science warned that data suggests the weakest global net ad quarter for Netflix since 2022.
And finally, Bitcoin seems to be holding its ground despite all this market noise.
Yes, Bitcoin rose a modest 0.3% to $64,253. What's really interesting is that its trading volume surged over 90% to $27.24 billion. When you see heavy turnover without much net price movement, it usually means aggressive buying and selling as investors rotate positions. Also, MicroStrategy, now going by Strategy, announced they bought another 520 bitcoins for about $34.9 million, bringing their total holding to over 847,000 bitcoins.
Fascinating dynamics across the board today, from tech talent shifts to geopolitical breakthroughs in oil markets. We'll be watching Thursday's PCE inflation data very closely to see how the Fed might react. Thank you for joining us on this episode. If you find this useful, please follow Market Brief After Hours. We'll see you next time.